Hey guys, hope you had a great weekend. Kicking it off right away with Palantir. So Palantir is breaking out to the upside over here. Friday, good volume on a nice green move. When the market was down this week, Palantir actually turned green. It would have been higher if we didn't get that pullback on the news that the FBI misused their software. Meanwhile, the New York Post reported it as a glitch. So that pulled us back down from 25 and change and 24 or so before recovering back up to 26 almost on Friday. If you notice, 26 that marked a 1-month high on the charts. Next area we want to look at for resistance is 2750 area. If we break through that, gap fill at 3191 is on the way. And I think a push to the mid 30s is in the cards in the next couple months. Again, trading short term is not a great idea as it typically pins the round numbers. Over the past few weeks, it's pinned around like 25, 24. So keep that in mind if you are trading weeklies. They are kind of risky. You can scalp them obviously on upside moves, but I'll go with longer term contracts, October or January, perhaps even, or even if you want to go longer term, you can buy, January 2023 contracts. So go a year and a half out or so, right? Again, Palantir is a long-term play. At some point in time, it'll push, 50, then 100. And you'll be looking back and saying, why didn't I buy it in the 20s, right? Solid management team, great execution, wide moat, very, very important software as well, high margins, great balance sheet right now overall. And the growth rate is going to be pretty high over the next 5 years. They expect it to be about 30% year over year, which I think is a sandbag number. I expect around 50% or so. If you do the math on the numbers yourself, you can extrapolate and find the valuation based on different multiples. So yeah, obviously a strong bullish case. It's my largest position right now by far in my portfolio. Obviously manage your own risk, do what you're comfortable with, and do your own research before you end up buying. Now, looking at options on Palantir, there are some ideas kicking around here. IV is not crazy high right now. And as a result, if you want to buy the stock, you're probably better off buying options instead. So here's the option chain. Again, if you go to the expiration for January, as I mentioned, the in-the-money call options, $20 strikes are about $6.75, right? So your break even is $26.75. Let's say by January, conservatively, we're at $30 a share, so about $5 higher than we currently are at. These will be trading at about $10 per contract, so roughly 38% upside from the current price. Not too shabby at all over the next 4 months or so. Keep in mind, we are in September on Wednesday this week. And again, if you want to trade these as a poor man's covered call, you could do that as well, where you buy the 20 strike, for example, and on a pop to toward 30, you could sell above the 30 strike and pull in some premium, reducing the overall cost basis, reducing your risk, and lowering your break-even price as well. If you do want to take ownership of the shares at the end of the contract, obviously, if you want to do that, you can sell your call option at whatever price it's trading at come January, and then use the proceeds plus an additional $2,000 because it's 20 strike right there, right? To buy 100 shares per contract, right? The expected move come January from the current price is around $7 right now. So upside right now indicated is around 33, downside is around 19. I think that 33 target is easily achievable, possibly even as high as 40 or 45 by January. And again, I'm trying to be conservative here so as to not exceed the expectations of people that kind of want to go all out bull here. Remember, it's traded in a range for a while now. It's consolidated for about 6 months or so. And October marks the 1-year anniversary of their direct listing, right? So long term, you're going to want to focus on the stock, and I would say hold it versus trading it. Obviously, you can trade it if you want to, but the big gains will be made in the long run by holding it, not trading it, right? Shorter term expirations, looking at September 17th. Expected move by this expiration date is about $2 in one direction. So from the current price, 28 or so, downside would be around 24. Looking at October expiration, looking at an expected move of around upside 29.40 or so, downside 21.60 or so, right? Sorry, 22.60 or so, right? So some good volatility here. Right now, the IV is 44%, historical is 52.7%. Earnings will be sometime in late October, early November, I believe. So keep that in mind as well. Yeah, that's all I have to say about Palantir. Very bullish on it long term. I think it's a very, very solid company, and I think that in the future it'll be one of the thing names going forward, right? So when you think ahead like 5-10 years and you think, what can I buy now that has a chance to go 10, 20, 50x in the next 10 years? This is one of those stocks, right? And again, I'm predicating that upon numerous different metrics, but I love the management team. Peter Thiel, he founded PayPal. Alex Karp has been there for a long time. They have used a great incentive structure in their stock offerings to their employees, wherein they've locked in most of their employees for 8 years, which is great because talent in the sector is very hard to come by, right? So these employees are locked up for 8 years. They're following in the practices of Microsoft in this regard as well, right? Now, moving on, I want to talk about AFRM. So Friday after market close, relaxing on the couch and get a ding on my phone saying that Affirm is partnered with Amazon, right? So they popped pretty heavily on Friday after hours to a closing price of around 92-ish after hours. They closed at 67.90, popped to 92. The high post their IPO was 146.90, right? So there is still upside, obviously, here. This pop tomorrow is going to create a big gap on the downside. Think about it from this perspective that now Amazon will be offering people the ability to finance over 4 equal payments with no interest, any items over $50, right? That's pretty bullish for Affirm overall. Long term, I don't see how they make money because once rates rise, it'll be very hard for them to make money given that their margins are pretty thin and they're only making money pretty much on the interest they're charging on late payments, right? Not actual payments. There's no interest charged on actual payments, only fees charged on late payments, right? So obviously bullish catalyst there on Friday, and you might see some upside toward 100, 110, possibly as high as 120 in the short term. I'm not trading it myself. IV's gonna be crazy high tomorrow. Liquidity in the option chain isn't that great, but I thought I'd point it out to you guys to look at. Obviously, a few weeks ago, Square acquired Afterpay, which is in the same buy now, pay later sector as Affirm. So the sector seems to be pretty hot, but again, it's not very innovative at all. Like Apple's doing it right now with their own products. They have a huge cash in their cash pile in their balance sheet. So they're offering customers the ability to buy MacBook Pros and iPhones in 4 equal payments as well, interest-free. It's not very innovative at all whatsoever, but what Amazon is doing here is brilliant because they're essentially passing off the risk onto Affirm, which can increase sales by allowing people to buy items they can't afford in 1 payment into 4 payments spread across 6 weeks, right? So interesting idea over here overall. If you want to, maybe collect some premium on cash liquor puts, might not be a bad idea there on the IV pop. Alternatively, if it pops as high as 120, some call credit spreads could be in order, but make sure liquidity is decent, which right now I don't believe it is. That's the idea for Affirm. Now, looking at, one second, sorry. AMD, right? So AMD Friday had a nice run to 111.40. And if you notice, after they hit all-time highs of 122 or so, they pulled back down. It tested 112.33 on August the 9th. They pulled back down again to a low of 104 and change, popped up, tested 111.71, next day 111.58, pull back down again. So now we're at a quadruple top in the short term at 111.40. Now you want to see a push above this number, above 112.50 or so. And following that, we can see a push as high as 117.50, possibly even 120 by this Friday, right, on the breakout. Looking at the weekly chart on the 1-year chart, you can see kind of what I see as well, right? So we hit all-time highs, pulled back down, held support at the 105 area pretty well. Obviously touched it a couple of weeks ago at 102 on that pullback in the broad market. And now we're at 111.40. Once we break above here again, we can make a run toward all-time highs, right? And that's following NVIDIA, who had a great report a couple of weeks ago. Also looking at TSM, right? So Taiwan Semiconductor, last week I discussed them and they were at 108 on the Friday. This past week, they had a nice run to 119, a high or so. And the reason for that is that they announced they'll be raising prices for their foundry by 10 to 20%, which is substantial overall, right? So having the power to do that while keeping your volume from your customers is very important. And obviously with the global chip shortages, TSM can do that, which is nice, right? So we saw a few weeks ago, Microsoft raised prices for Office 365, and the stock price there popped up nicely. And the same thing happened this past week with TSM as well, right? Where they announced they're raising prices and the stock price gapped up to 115 and change, ran as high as 119, came back down, consolidated. Now I think we're going for that gap at 124.39. And that should happen pretty fast. Obviously, once analysts revise their estimates toward the upside, based upon the higher margins or margin expansion, if you will, you're going to see probably price targets of around 150-ish. And I think that's a good catalyst to see some upside momentum in TSM. Again, lots of consolidation over the past, past roughly 8 months. And now I think we're going to break back up toward all-time highs of around 142. Obviously, gap fill over here first at 124.39. Possible gap fill on a downturn in the broad market over here at 112.11. But I don't expect this to happen very soon because of obviously the bullish catalyst that came out last week, right? So options are pretty cheap on TSM. I would go longer term, as it might take a few months to get back up to all-time highs, but trading short term is not a great idea overall. Go longer term, be safer, obviously manage your own risk. The gap fill at 124.39 is pretty nice. Decent upside right now from the current price of about $6 or so. Not too bad at all, right? So I'll go out to January or further. Obviously, risk whatever you can afford to lose, and do your own research if you don't understand what I'm talking about in terms of the margin expansion, right? Just read up some articles on TSM, and you can see what I'm talking about in terms of the margin expansion based upon them raising prices, right? Next up, we're going to talk about URI, United Rentals, right? So obviously, everyone's heard about the hurricane hitting the Louisiana coast, and that's going to cause a lot of devastation, destroying buildings and houses and whatnot, creating a lot of damage and a lot of debris, right? And so what will happen is that each time a hurricane hits the U.S., after it passes by, people need to rent trucks and equipment to start, fixing buildings and moving debris and garbage out of the area, right? So URI rents out this equipment, and they're trading not too far from all-time highs of 365 or so, but I think this could be a nice catalyst to the upside on URI. Obviously it's trading near all-time highs, so be cautious. CSPs might not be a bad idea in your support areas, but support's at like 290 right here, so pretty far away from the current price. Option chain liquidity isn't very good either, so keep an eye on it. I'm not trading it myself, but just thought I'd mention it to you guys as an idea on how to trade the hurricane here. Hopefully everyone's safe, and hopefully it passes by and doesn't create too much devastation in its wake, right? Next up is Aapl. So Aapl should have their event to announce the new iPhone, Apple Watch, AirPods, and iPad in the next few weeks. They should announce the date this week, I think, and it should be probably the next week or the week following, around September 13th, followed by a release date the following week or so, right? So typically Apple rallies into these events and then falls after the event itself. Right now it's consolidated in a nice range at 147.50 or so. Since their earning report, they haven't really done much, right? They hit all-time highs at 150 or so after earnings, before earnings. They came down and then they popped back up again, and they kind of just sat in this range for the past few weeks. So I expect to push up to around 155 new all-time highs prior to the event. But obviously, take that with a grain of salt. That's my own thesis right there, and I'll be trading it accordingly. Longer term is a better way to play Apple, obviously, as it goes up in the long run. You can see the long-term chart to go at 10 years. You could have bought it 10 years ago for 13 bucks, basically, and current price is 148. So about 1,200% return roughly in the past 10 years, right? So again, the common theme here is invest for the long term, trade short term, obviously, and scalp in and out here and there. But the big money to be made is in the long run, not in the short run trading, right? Looking at SPY as well, we had all-time highs last week as Powell sounded very, very optimistic about inflation, which I think is misplaced. His optimism, I think, is misplaced, that is. So Friday, we had all-time highs at 450 and change. Qs are also very, very up there as well, all-time highs. That's not it, triple Q, not QQ, right? So again, all-time highs over here. Here's the one-year chart. And you got to wonder how much gas we have left in the tank on Qs and SPY. Russell also pushed heavily on Friday as well, right? Up to 226.71. The high of the year was at 234.53. So we're not too far from that either, right? Obviously, trade cautiously in September, as it is a pretty volatile month typically, and October as well. But right now, near-term catalysts, I don't really see many to the upside. We could trade sideways for a few weeks. I still expect a pullback at some point by end of the year. I initially thought it would be October 1st, but the Jackson Hole discussion already seems to have been a non-event for the market. So that kind of kiboshed my thesis on a pullback of 10 and 12% by October 1st. That being said, if you do want to play a pullback, I suggest using put ratio spreads to mitigate your risk overall. You can watch some of my previous videos to see how those are played out. And usually they're very, very small debits, if not credits, in which if SPY or triple Q doesn't fall at all, you lose nothing at all whatsoever, right? Otherwise, there was Alibaba as well. Again, I'm not trading it at all right now myself, but you saw it, drop down to a low of 150 or so support area, gap up to 174, followed by a pullback down to 160 again. It's pretty oversold, and I think we can see a nice pop toward 200 again in short order. But again, I'm not playing that myself, so take it with a grain of salt. And just an idea that I thought I'd kick around to you guys. If any questions or comments, drop them below. And if you like the video, obviously, like it, share it, whatnot, whatever. I appreciate that. Otherwise, manage your risk well. Have a great week, and we'll do some Q&A right now with the private group. All right, guys.